Hey, it's Giuseppe with Zenith Home Loans. Hope you're doing great. In today's video, I wanted to discuss a very basic appraisal gap coverage conversation, especially when it relates to a home buyer who's doing a minimum down payment, whether it's 0% on a VA loan, 3.5% on a FHA loan, or a 3% down payment, or 5% in some cases if you're not a first-time buyer on a conventional loan. So let me share my screen with you. There are some additional videos that I'll do showing ways to cover an appraisal gap coverage if you're starting off with a larger down payment. But if you're starting off like on this first column here, a $400,000 purchase price with 3% down payment, the loan is $388. You need about $18,000 or so at closing to cover everything as far as down payment, closing costs, setting up the escrow account, etc. If the value comes in low, then there is a shortfall on how much the bank will lend. What I mean by that is that banks will always lend on the lower of the two, purchase price or value. So if the home agreed upon price is $400,000, but the value comes in at $390,000, the loan itself is maxed out to, in this case, it's a 3% down payment. That's the minimum required. So the loan is 97% of that lower appraised value. So the loan goes from $388 to $378. Okay, so in normal times, which we are not in normal times right now in the Denver 2021 housing market, it is such a hot seller's market that it's very common for buyers to write offers that they are going to cover a certain amount of appraisal spread. And that depends, of course, on their finances and availability to do that. In this case, the way the math works out is if the purchase price remains at $400,000, loan is maxed out now almost $10,000 below what it was before. That directly translates to how much money the buyer needs to bring the day of closing. And so that is very important for us to have this conversation before you write an offer or write an appraisal gap coverage to make sure you understand kind of the worst case scenario here. During a more normal market, then there's room to negotiate with the seller. So let's say typically if the appraisal comes in low, if it was just a few years ago, a more balanced market, if the appraisal comes into $390, very good chance that the real estate agent can get the seller to negotiate the price down to $390. And of course, that's a win-win-win for the buyer because they're paying less, their loan is less, their payment is less, and their amount due at closing is less. So, and just a very basic example of how an appraisal gap coverage works and how the loan is always based off of the lower of the two, purchase price or value. Let me know if you have any questions, and then we can go from there. We'll talk to you soon. Have a great rest of your day. Bye-bye.